What is market cap? Market cap, short for market capitalization, is a quick way to figure out what a company is worth in the stock market. It's calculated by multiplying the company's share price by the total number of shares available. So, if a company's share price is £10 and it has 1 million shares, its market cap is £10 million. In short, market cap equals share price times number of shares. It's one of the simplest ways investors compare companies of different sizes. Why does it matter? Market cap helps you understand the true size of a business, not just how much one share costs. Some people assume a high share price means a big company, but that's not always true. A company with a £500 share price might still be smaller than one with a £10 share price, depending on how many shares exist. It also helps with real-life investing decisions. For example, if you're choosing between two companies to invest in, one might have a low share price but a huge market cap, meaning it's a global giant. The other might look cheap but actually be a much smaller business. Market cap helps you understand the scale you're dealing with and the level of risk you might be taking. Market cap is also used to group companies into categories like large cap, mid cap, and small cap. These groups often behave differently, especially when markets rise or fall. Large cap companies tend to be more stable, while small caps might grow faster, but carry more risk. Here's a simple example. Let's say there's a company called SunPod, which makes solar-powered phone chargers. SunPod has 5 million shares available and each share costs £20. If you multiply 5 million by £20, the market cap is £100 million. That means investors as a group think the whole company is worth around £100 million on the stock market. If more people buy the shares and the price rises to £30, the market cap jumps to £150 million, even though nothing about the number of shares has changed. As of now, companies like Apple and Microsoft have market caps in the trillions, making them some of the biggest in the world. Meanwhile, newer or niche companies might have market caps under £1 billion. What else should you know? Market cap isn't the same as a company's true value, it's just what investors are currently willing to pay for the whole company based on the current market price. It doesn't take into account things like debt, cash in the bank, or future potential. It's a snapshot, not the full picture. And remember, market cap depends on both the share price and the number of shares. Companies can change the number of shares in circulation. Buybacks. Sometimes companies use their profits to buy back their own shares from the market. This reduces the total number of shares available. Even if the share price stays the same, fewer shares mean the ownership is concentrated among the remaining investors, often boosting earnings per share and potentially supporting the share price. Dilution. The opposite can happen too. If a company issues new shares, say to raise money for expansion or to reward employees with stock options, the total number of shares increases. If the business hasn't grown to match, each share now represents a smaller slice of the pie, which can put downward pressure on the share price. So when you think about market cap, it's not just about price changes, it's also about how many shares exist. Sometimes companies are overhyped, and their market cap shoots up even though they're not making much money. Other times, solid companies are undervalued and might have a lower market cap than they deserve. Because it depends on the share price, market cap can rise or fall very quickly, even if the business itself hasn't changed much. That's why some investors also look at other measures like revenue, profit, or debt to get a fuller picture. Market cap also affects which funds or indexes a company might be included in. For example, the S&P 500 only includes large-cap US companies. If a company grows enough in market cap, it could get added to one of these indexes, which often gives its share price a boost as more investors buy in. You might also hear about something called free float market cap. This only counts the shares that are available for the public to trade, not ones held by founders, governments, or long-term insiders. Some stock indexes use this version, but if you're just getting started, the basic version is more than enough to understand the big picture. To sum it all up, market cap tells you how much a company is worth on the stock market, at least in the eyes of investors. It's a helpful tool for comparing companies, spotting risk levels, and understanding where a business fits in the bigger picture. Just remember, it's not the full story, so it's best used alongside other information. Thanks for watching this video. Not sure where to go from here? You don't need another video, you need a plan. Grab the free 5-day series below and start investing with confidence. The link's right here on screen and in the description, don't miss out.